We are back. I am Russell Faucette with the Stern team at Omada Real Estate, and I am here with Mandi Henriod from Wise Home Lending, and we're going to update you on the market and talk about a new product that's come out. So let's start out with where are rates?
Yeah, pretty much the same. So the Feds met yesterday. General consensus is that, well, A, they didn't lower rates yesterday, and secondarily, there's kind of this lean or narrative now that they're not going to this year, that there's no expectation.
So
of
the
a rate
headline
cut.
I saw said maybe 2 times. Is that no?
If you look at, so you actually can go online. People don't realize this, right? But it's a voting body, and you can actually go through and see who's voting which way. And it is more heavily skewed right now for no rate drop.
I actually am okay with that.
I am too. I actually think that this is a healthier market for our buyers.
Yeah. Well, and that's the thing. So if we look at like, okay, what is the higher interest rates done and where are we at inventory wise, we're still not back to where we were in 2019,
right.
Which over the last 10 years, look at, 2018, 2019, like those I would consider more normal markets than
right.
what we've seen. And so I think that as that inventory gets up back to those levels, I think once we do get a little bit of a reprieve from the interest rate, a quarter point, half point, because even now, like when the news comes out,
right? Yeah, because I mean, we see it go from about 6.75 on a normal conventional up to about 7.25 and back and forth, right? So I mean, that's about a half point swing any given day, depending on what market data is coming out. Right? But every time we dip below that 7, we see this new like rush of people trying to get into homes. So you're absolutely right. We are just on this tipping point.
Yeah. So the article that I read said when this first started that we needed to get back into the 5s for like normal activity to pick up. They said as of last week that if we were to hit 6.6, that
which
a
we
lot
have
of buyers,
had some moments of that, right? If you are sitting on the fence, like that actually happens periodically. We actually had one of those windows last week for 2 days.
Right.
We lacked a bunch of loans because we dipped down, right?
Yep.
So those dips are small. It's impossible to time around them. But the other thing that we're seeing is, quite frankly, the conversations with sellers is finally settling down. And sellers have stopped expecting that they're going to get everything they want, right?
Right.
And there's good, solid, win-win conversations going on.
Yep. And so, I think as our inventory picks up, I do think that the way things are going, that the economy as a whole has slowed down a little bit.
Yes.
And so I think with time we will see interest rates come down. I think they're going to settle into the 6s, which I actually think is a good, healthy rate to get us back to essentially the 4% appreciation line.
Yeah, absolutely.
And so it definitely lowers sales, but I think there's opportunity. There's opportunities for buyers right now. Sellers are still, I mean, if you bought, first quarter of 2022, you might have a good interest rate, but you could be upside down if you didn't put a lot of money down. But outside of that, like, people that bought before that have a ton of equity still.
Absolutely.
I mean, I was looking at Park City numbers, and over the last 10 years, they've seen 138% appreciation in the properties. So averaged out, it's still over 10% per year. And so, like, yes, I understand.
We are seeing people starting to get at peace with where rates are, let go of their 3% rates in order to make a move. I have multiple clients who are like, we just have not, we've outgrown, our habitat. So there is movement. People are it's becoming normal.
Yeah. So, well, and double-digit appreciation isn't healthy. It's actually, I mean, that's where we start using the word more inflation as opposed to appreciation.
Right.
Because, I mean...
Absolutely. And it hurts our buyers, especially our younger generations trying to enter the market, right? So I agree. I would just as soon we stay somewhere in the 6s and keep a really nice, stable market that our kids can potentially buy into someday.
Let's not have the pendulum swing. Let's have 6 6 to 7 be normal, and
Yeah.
let's let the economy, wages, everything else catch up.
Yep, absolutely.
So for your, they are doing some things to make some affordable housing moves, right? And so UWM has come out with a product
Yeah.
that is hopefully going to help a little bit.
Yeah, so we're a broker. Broker means that you can shop amongst multiple banks, right? Which is great. It means that we get to go, okay, who's doing the best thing for our client? And United Wholesale right now has a program where, depending on where you are in the country, it might be up to 2% of your down payment. But they have paired a program with the affordable housing programs, which there are 5 of those, right? There's 5 buckets. There are income limits, but they're pretty high. Like they're 6 figures. You can make $100,000 and still fit into those.
Is that household or?
It's qualifying. So what we use to qualify.
Got
right?
it.
So we can do things like leave one borrower's income off if we don't need it, right? So here's what they're doing is, if you're in some parts of the country, this becomes 2%, and they're advertising it as you come in with 1% down, and we cover the other 2%. But the 2% is maxed at $7,000. Here in the Utah market, that's probably not going to be 2%, right? It's just a different market. But it's still $7,000 that they're going to give you as a grant towards your down payment. It can be used towards down payment, can be used towards closing costs. So I will always take $7,000 of free money.
Yeah.
I don't know about you, Russ.
Sign me up.
Right? So the other thing that we are doing is we're pairing that with lender-paid mortgage insurance. And in that product, what I'm finding is we can get a rate right around 6.75 if our client has good credit, and no monthly mortgage insurance. So we're covering the mortgage insurance in that rate.
Okay.
It's only about an 1/8 higher in rate than the normal lock. That mortgage insurance is roughly $200 of your payment, right? That is a substantial shift for your buying power and for your affordability.
Yeah.
So we are layering those things together with them. Very cool product.
Awesome. So who qualifies?
So you don't even have to be a first-time home buyer, believe it or not. So you can be buying a second home or whatever. You can't own other homes while you're doing it. So if you are departing a residence and keeping this property, you can't do that.
But
if you're selling and you're buying, you can use the program. Like I said, they have income limitations to it, but they're pretty substantial. It's not like the local city grants where the income limitation's like $54,000 a year and it's household income. Not many households can function at that in Utah, right? So we don't find people who can fit into those city grants very often. So it's got a substantial span for that income limit. A lot of our clients, we do a lot of them. A lot of our clients fit into that.
So any credit qualifications or anything like that for it?
You have to have at least a 620.
Okay.
Right? It follows conventional guidelines.
So I mean, you should probably have about a 620 to buy a home anyways, right? I mean, work to get that credit up.
We do have clients that, life happens.
Yeah.
And, we can get you in at a 580
if
you have a down payment. But
this one's 620.
But this program, you need to go conventional, you need a 620.
And then are you pairing that with a conventional loan product? Is it FHA?
It is a conventional loan product.
Okay.
So both Fannie Mae and Freddie Mac have and that's why I say there's 5 of these loan products.
Okay.
Because Fannie Mae and Freddie Mac both have variations of it. And multiple. So we just go, okay, which bucket can we fit into, right?
Yep. And then, so you said, so you'll need to come in with at least 1%, maybe a little bit more.
Probably more because $7,000, it's capped at $7,000.
Got it.
$7,000 probably isn't going to be a 2% down payment around here.
What if I'm selling a home and I was planning on putting that equity down and I was planning on putting like 20% or 10%. Can I still use the product, or is it limited to like I only can bring, I have to do the 3%?
There is some fine print on it. You can still use it, but they do put some limitations in as far as like how much you can have left over in assets.
Okay.
So
talk to me about that. What does that mean?
Well, because it's like any of the grants. All of the grants do this, and most people don't know this, but all of them say, hey, we are here to help homeownership, right? We want to help people get into a home. We want to make it accessible. If you have, after buying your home, $80,000 in your savings account, you didn't need our money, and we're going to use our money for someone who actually needs our money.
Now, is that like
sense?
what about like 401ks or retirement? Do they take that into account?
Know, that's a good question, because yes, they would take it into account, but how do they know you have it?
Yeah.
Right? I mean, your pay stubs may show that you have a 401k, then they would know you have a 401k, right? Yes, they would include that as an asset. So proceed with caution on that.
And then, so it's a grant, so I'm assuming there's not an unlimited fountain of $7,000
Unfortunately, yeah.
payments.
Now, this is not the first time that United Wholesale has pulled out this program.
Okay.
This has happened before. But it does end. It is not indefinite. So
in your crystal ball, what's our window for it?
The last time that we had it available for roughly 3 months.
Okay. So it's not like you got to be
tomorrow.
buying a house this week.
No.
Okay.
No, but if you are out shopping, if buying a home is on your plan for this year, you might want to try to fit into that timeline.
And is this like a rate lock where you would lock it in and say, hey, I'm buying a home now, and if it takes me a couple months, or is this
No, we have to have a property.
Okay. So
you have to be under contract. We have to basically submit a loan package, right? And then we lock the interest rate and lock all the pieces to it.
Okay.
So you can't do it and then go shopping. You gotta.
So you gotta have the property.
Now we can, in the pre-approval, we can map it out and go, okay, you qualify for the following things, and I suggest that, right? You never want to count on any of these pieces because there's specific rules that are so detailed that we could never do it here.
Yeah.
So as part of your pre-approval, that's one of the things that you should traverse. So by all means, get your pre-approval before you go fall in love with something. Yeah. But that can be mapped out up front.
Is this something that I would have to pay back if I sold the property?
That's actually a really good question, Russ. I don't remember reading anything about a payback. I might have to look that up and then leave a comment on your video and be like, hey, more details here.
Yeah.
Because I don't remember reading one. Usually they do have something that says like if you sell within the next 5 years or 15 years or whatever. So let me double check that.
Okay. Yeah. But anyway, either way, I mean, it really sounds like a good product that like, it's kind of one of those that like, why wouldn't you? Is there any reason why someone wouldn't consider using it?
If you are eligible for these programs,
yeah,
you would be crazy not to use them, right? It would
get
a lower interest rate, $7,000, and no mortgage insurance. That combination is awesome.
And then you said it, as being a broker, you're able to offer this product. So am I wrong in saying that like you have to work with someone that can actually offer it? Like it's not available everywhere?
It is not. So not all of the banks are doing it.
Okay.
I know that Zion's Bank has a similar, which is Zion's is a very local, Utah item, right? I know Zion's Bank has a similar product that they're doing. It's not $7,000. I want to say it's either $2,000 or $3,000. Have you heard about that?
I have not.
I mean,
we're hitting up
against it. Yeah, we're hitting up against it. I don't know the details on there.
Yeah.
I do know that Zion's Bank has something out there similar, but it is specific to But there's not very many mortgage brokers who are not set up to work with United Wholesale.
Okay.
I think that's pretty common.
Cool. Okay. Well, I like the sound of it. I mean, possibly getting a loan in the sixes, 6.75, no mortgage insurance, access to $7,000, whatever the situation is, like all of those sound pretty good to me.
Yeah. So. Here's the thing. Every bit helps.
Yep.
Right? When you are trying to get into a home, every little thing helps.
Yeah. Well, and bringing out the crystal ball, right? Like you talked about rates. They came out yesterday. They're probably not, the rest of the year.
And I can see why the media commented that they think they're going to, right? Because there are specific humans who made comments that were in favor. But if you look at the actual voting, it is skewed towards no rate decrease.
Well, and if we look at it, at the beginning of the year, it was going to be 6 drops this year. So
yeah,
I think we're kind of used to it's not going to change.
Yeah.
And if it does, it probably won't be drastic. And so, I think our market, market volatility with the stock markets and things like that will actually cause the rate to swing more than what the Fed would do.
Yeah, I agree. And I think because the Feds are trying to stabilize against all of those items, right? Inflation, stock market. I just think they're not going to make any drastic moves for a minute.
Yeah, so if you are on the fence or thinking about buying a home, this is a great program. It's a way that you can get access to a little bit of assistance with a down payment.
Yeah, if you have a little bit of a down payment and you just don't have the full, right? If you're just close and not quite there, then give us a call.
Yep, and it's a great time, great program. So if you have questions, reach out to Mandi. She will be able to answer those questions. As always, we appreciate you tuning in. Reach out, call, text, email, comment below. Thank you.